Namaskar, this is Akhilesh Bhargav. Welcome to Tit-Bits on Business and Finance with me. A fierce debate is going on in respect of the digital transaction tax on e-commerce levied by India with effect from April 2020. The US calls it a discriminatory tax which discriminates against US tech giants and has been probing the levy. Let's talk about it because this is a tax which is certainly here to stay and which is going to give India tax revenue in rising numbers year after year henceforth. We all know that digital or e-commerce is a new platform and format of doing business, whether domestic or global. Because of technology, this business needs no physical presence where you may be located and where you sell your goods and services. And that's what creates tax complications. Normally, it is the geographical boundary of a country which decides its authority and jurisdiction to levy taxes on any income earned in that territory in that geographical jurisdiction. But digital e-commerce transcends any geographical boundaries. You may be based in one part of the world and you can do business in any other part of the world. Presence perhaps is not even needed in even one single country. That's the way the technology is. And that's where it poses a challenge to taxation. You may be based out of America and you sell goods in India and you don't want to pay taxes in India because you're not based in India. Not needing a physical presence has been the challenge. And the tech giants have used this to their advantage. So Google, which is the global giant in respect of digital advertising services and which is an American company, sets up base in Ireland. And the Google Ireland company then does business of digital advertising services with Indian entities with India. Here is a company which is actually an American company but sets up base in Ireland, does business in India, and by doing that it manages to bypass paying any taxes in USA and also in India. And in Ireland, Google has negotiated a very favorable tax treaty under which it pays a mere 6% income tax on these kinds of earnings. It is because of this arrangement that Google used to earn thousands of crores by way of digital advertising and related services from India, and it paid no tax here. But that was until 2016. Until 2016, we used to pay huge amounts of monies to Google, to Facebook, to YouTube, to their companies abroad, and they would pay no tax on this income that they earned in India, and India was deprived of its share of income. From 2016, India started levying what was called an equalization levy tax on digital advertising services rendered by the likes of Google, Facebook, YouTube, etc. to Indian entities. Therefore, if you are an Indian entity and you use these services of Google and remitted money abroad, 6% was a tax payable on it, and it was called equalization levy. It managed to equalize the fact that even if you are not having a physical presence in India and you have earned these kind of incomes from India, you will still pay tax at the rate of 6%. That started from 2016 onwards. It is because of the levy of equalization levy tax by the government of India from 2016 onwards that India has managed to collect such taxes to the tune of 2,600 crores from 2016 to FY 2020. It is because these taxes are being collected now that digital advertising services rendered by the likes of Google, Facebook, YouTube, etc. to Indian entities have not gone untaxed. If you do a backwards calculation, 2,600 crores at the rate of 6% means that these technology giants have collected collectively 44,000 crores during this period by way of digital ad services from India. That was a kind of income which would have gone untaxed in case India had not levied digital tax equalization levy from 2016 onwards. But then these are not the only services or businesses that are being done through e-commerce or digital mode in India by foreign companies. E-commerce, selling of goods and services, in fact, is proving to be a much bigger game now. With technology, with the usage, with habits of people changing, E-commerce is becoming the new platform, and any company which may have no presence in India can very easily sell goods to consumers in India directly. That's why from the 1st of April 2020, in this year's budget, it has been proposed that an e-commerce tax at the rate of 2% will be levied and collected by the government on any foreign company which earns income in India by way of e-commerce, sale of goods and services in a digital mode. That means the likes of Amazon, the likes of Alibaba, Tencent, Google, Facebook, etc., all of whom or anybody who renders these kinds of services or sale of goods in India are now going to pay tax at the rate of 2%. The purpose, of course, is to see that those entities which do not have any base in India but are yet earning income out of India must be taxed. When this levy was announced, e-commerce tax was announced, the US objected to it. It says that it is discriminatory to US tech companies and it has launched a probe. That's what also happened when France levied such a tax. The US called it discriminatory and it retaliated. In retaliation of the levy of 3% of e-commerce tax by France, the US levied import tariffs at the rate of 25% on specific French goods by way of a retaliation. You can expect this kind of retaliation against India by the US also, but India does not need to compromise. This tax is certainly legit and it is bound to come up in bigger volumes. As we said, e-commerce is a rising business worldwide. It is because of this that the OECD has been in discussion with over 140 countries trying to set up some standard rules, procedures, tax rates, etc. for taxing e-commerce. Very ironically, the US has been boycotting these meetings of OECD. It's on its own warpath. But the reality is there is no discrimination involved here when India taxes foreign companies for their sales that they have conducted here without having any kind of a physical presence in India. What are the larger issues that come from this? The first is that e-commerce, digital transactions are here to stay and they are the present mode of platform, as we said in the beginning. In 2017, the global e-commerce turnover was about $2.38 trillion. In 2019, it rose to $3.5 trillion, and in 2023, it is expected to be $6.5 trillion. And interestingly, 85% of it is by way of retail sales. Thus, this is a new format of doing business. No physical presence, but you still conduct sales in another country. And this kind of e-commerce transaction sales worldwide is growing at an average rate of 20%. You do not need to set yourself in any country and you can still conduct business, but it should not happen that you go untaxed. And that's why we have this 2% tax being levied by the government of India. So as we said, e-commerce is here to stay. As technology advances, as our habits get tuned to doing e-shopping, we are only going to see larger volumes of e-commerce worldwide in the times to come. And if e-sales are there to stay, so will be their taxation on these e-sales. And that's why India has levied this digital tax. This digital tax on e-commerce is also as per the WTO guidelines, rules and regulations, and also as per the tax treaties which various countries have entered into between each other. Therefore, there is nothing illegal or nothing to object about it, as the US has been trying to contend. Further, India is not alone in this respect. UK levies this kind of a tax, so does France, so does Italy, so does Greece, so does Austria, and so do Indonesia, Malaysia, Vietnam, and many other nations. Nobody is singling out US companies. If e-commerce tax is going to be levied on an Amazon, it is also going to be levied on an Alibaba and Tencent, which are Chinese companies. There is no case of discrimination at all, as the US claims, and India will have to take a very stern and firm stand to prevent any kind of a compromise on this, despite any kind of a pressure, which includes retaliatory tariffs, if any, that the US might choose to launch. This is a new form of sales, and this is certainly the new form of taxation. The industry in India has been for some strange reason demanding that the levy of this tax must be deferred and delayed. We do not agree with it. This kind of income must be taxed, and there is no reason why this should be deferred. It is even worth noting that e-commerce companies from abroad They can set up a presence in India very easily, and they can also vanish very easily. And therefore, these taxes are always levied at source. You don't wait for the year to end, you do it simultaneously. Otherwise, if tomorrow the company closes down, the government will have no way that the taxes would be able to be recovered. And finally, 2% tax on e-commerce is not unreasonable. According to us, it is actually moderate. Countries have been levying these kind of taxes in the range of 3 to 6%. We are at 2%. In fact, in our analysis, in the years to come, as the volume of e-sales grows in India, from 2%, this might be increased certainly to a higher figure, which we think would be justified. Thus, e-commerce and taxation on e-commerce are not really a bone of contention. They are here to stay, and the US will need to understand that. This is Akhilesh Bhargav signing off till we meet again. Namaskar.
हमारे घरों में भी बच्चे होते हैं जो हमसे प्यार दुलार की आस करते हैं।
हमारा भी जीवन साथी है जिसको हमारे ड्यूटी से घर आने का इंतजार होता है।
हमारे घर में भी एक बूढ़ी माँ है जिनके लिए आज भी हम ही आंखों के तारे हैं।
लेकिन हम हमारे घरों में नहीं हैं। आपकी सुरक्षा में कोई कसर न रहे, इसलिए हम अपने प्रियजनों से दूर हैं।
हम में से ही कुछ तो अब इतने दूर जा चुके हैं कि वो वापस अपने घरों को लौट भी नहीं पाएंगे।
हमें गर्व है कि हमारे कंधों पे मुंबई शहर के नागरिकों की सुरक्षा की जिम्मेदारी है। हमारे जज्बे और बलिदान को व्यर्थ न जाने दे। इस संकट के समय में आप घर पे रहे, सुरक्षित रहे।
Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app, choose the language you prefer to get updates in, and be up to date with the latest news.
If you like this video, please share it, and we would love to hear your comments in the comments section down here. Also, please do like our Facebook page and follow us on Twitter to get minute-to-minute news updates. For more such shows and videos, well, subscribe to our YouTube channel.